Kiss Big Lots goodbye. Hey, Bulls and Bears, back with another dose today. Economic reality. Another retailer may be getting wiped out. There's news that Big Lots may not be around much longer. We're talking about the retailer Big Lots. It's been around for decades. We're going to talk more about that later in this video. It's not 100%. It's not baked into the cake, but things aren't looking so good for Big Lots and other retailers as well. But that's just one of the latest ones that we need to talk about. Let's go ahead and get into it. Financial, economic news, the cost of living, investing. We're going to talk all about it today. First up here, Costco raising their membership fee for the first time since 2017, hiking it by $5, right? Not a big deal. Not a big deal unless you're someone that rarely goes to Costco. Like, let's say you buy the membership and go maybe once or twice a year, you may not be saving enough to justify the cost of the membership. So it was $60 for annual memberships. It's going up to $65. It's also going up in Canada, so the USA and Canada. The executive membership will go from $120 a year to $130. Again, not a big deal, right? $5, $10 for the executive one, but added on top of everything else is just another bite out of the pocketbook. And most people, most families don't have the budget for even more smaller bites like this out of their pocketbook. So will people just pay it? I think it's going to be like the Netflix thing. They raise it so slowly and incrementally that I think people will just hang on. They'll just go into debt in order to keep this quote unquote luxury, in this case, a Costco membership. All right. And I guess if you want to consider the $1.50 hot dog package, worth it, you're going to save, $2 on a hot dog twice a year, and maybe it's worth saving the $5. S&P 500, another all-time high. This today, we're recording this July 10th, by the way. S&P 500 closed above 5,600 for the first time. We have to talk about this. Remember, a few years ago, we had the Prez out there bragging about the stock market. Now we have a Prez that doesn't even brag about it. He probably doesn't remember to brag about it, but he doesn't brag about it, and it's an all-time high. All right, folks, this is not about who is supposedly running the country. This is about the debt, the banks, the system of money right now. You click a button, at the click of a mouse, trillions of dollars. The stock market could keep going up even as consumers are wiped out, and businesses are getting wiped out. We're on pace now. More recent news, we're on pace to have more corporate bankruptcies this year than 2023. We're going to get into that here in just a few moments as well. Got this inflation report coming out tomorrow. Traders are looking for not deflation, not a lower cost of living. They're looking for just a lower inflation number to justify rate cuts. That's a lot of the optimism right now in the stock market is people are betting on rate cuts. Will it happen? We'll have to wait and find out. Bankruptcy surge, corporate America in June. Monthly filings returned to pandemic heights. So the amount of bankruptcies we're seeing right now amongst businesses is as bad as it was back in the pandemic, 2020. Is that a good economy? So we're at pandemic levels as far as how many bankruptcies. U.S. corporate bankruptcy filings soared in June, according to S&P Global Market Intelligence. The rating agency reported that 75 new corporate bankruptcies were filed just in the month of June alone, pushing the first half total to 346. That's the highest level in 13 years. Remember, throughout 2023, we were talking about this, and one of the things that we mentioned then, and I say now, it's going to continue to get worse. It will continue to get worse, and it has. We just surpassed the first 6 months of 2023 in 2024, right? So, in other words, we're on pace based on what we've seen so far compared to last year. We're on pace to have a worse year than last year, and this is the highest level in 13 years. The pace accelerated from the first months of 2024 and is only rivaled by one of the busiest months in 2020, where shock from the pandemic pushed a relatively high number of companies into bankruptcy. Right? So this is another thing that we've been right about. It seems like every episode we are coming out with news, and I don't want to say I told you so, I told you so, I told you so, because most of you know. Most of you know. I mean, there's maybe 1% of you, maybe less than 1% of you. I see the thumbs down ratio 99% thumbs up, 1% thumbs down. Less than 1% of you are still clueless, right? But 99% of you, so the vast majority of you, know exactly what's going on. You know this is not fear mongering. You know this is not doom and gloom. You know until something structurally changes in the financial system, in the monetary system, that this is going to continue to get worse. And imagine what's going to happen if we have another, say, tragic situation like 2020 where everything gets shut down. All the new money they're going to put out into the economy. We still are feeling the effects of the money creation from 2020 and beyond. How much worse is inflation going to get if they have to bring in a bunch of more rescue programs, stimulus checks, cancellations of foreclosures, you name it, rents, all the above, like similar and maybe even worse than what happened in 2020. Janet Yellen is out there, and this is the article here at Global Times. Yellen admits sanctions could impact U.S. dollar dominance as concerns mount over dollar hegemony. So the United States, we've got sanctions now on a lot of different countries, and it's causing a chain reaction because other countries are looking at this and they're saying, wow, what if we're next? What if we're the next country to be under sanctions? So it's causing more countries to join the BRICS alliance and try to get out from under the dollar, right? So all this is playing out, folks, as we speak, and all we can do is prepare for it, know what's happening, and try to get ready for everything here, right? The Fed chair gives one of the most optimistic testimonies in a while, according to some people. Well, what they think is optimism, I think is just I think it's just lies. Any sort of optimism right now, I mean, nothing wrong with being optimistic if you just want to bury your head in the sand, right? It makes you less stressed out to be optimistic, right? Nothing wrong with being optimistic. I'm actually optimistic. I think we're going to go through some really, really tough times, though, before we get to the better times, right? I do think better times are ahead of us, kind of far down the road, maybe 5, 6 years. But we're going to go through a deep, deep rough patch. Just like we came out of the Great Depression, we learned from that and things got better for a while. The United States was a superpower after the Great Recession or after the Great Depression. Um, some would say the greatest country in the world, or at least the biggest economy. Now, were we the biggest economy, and are we still the biggest economy because of all the money we can just create? Or are we actually better and smarter people here in the U.S.? I'll let you all debate that because that's a loaded topic there. But there are people out there, saying the U.S. is the best country in the world, we're the greatest. So if we are the greatest, okay, great. But ask yourself why. Would we be the greatest if we didn't have the dollar reserve currency, the dollar being the world reserve currency, and the ability to just create endless amounts of these digits that we call dollars? Debt is fueling American summer fun. Many will be paying it off for years. Another article that goes on out of Morningstar here goes on to talk about how Americans are just spending money and racking up debt in order to do so. Right? No one is worried about spending money. They're not worried about racking up debt because the people, like I talked about in our last report, it's not real money. It's just a swipe of a card. Many Americans are willing to take on debt to enjoy the summer, but will end up carrying those balances with them for months. We just talked about 2 reports ago about how people, what was it, almost 50% of people are still paying off last year's debt, last summer's debt. It goes on to cite that here. 46% of people are still paying off credit card debt from last summer. So what's it going to be from this summer, right? We see it jump up every year. In other words, the numbers are getting worse each year. The debt's getting worse. The number of people behind not paying off their debt gets higher each year. Right, on to the main story here, Big Lots. Here's how it was put out here in an article, USA Today. Big Lots to close 35 to 40 stores this year amid doubt the company can survive. Doubt the company can survive. So it's a lot of the usual suspects. It is the theft from the stores. Of course, they're blaming inflation, and they even blamed the supply chains for the problems. Well, one of the big problems they really didn't mention here is consumers are tapped out. They need to pull back on spending, and Big Lots is one of those places where, I mean, it's not that big of a selection. It's not as big as a Walmart or a Target, and it's not that much cheaper. It used to be kind of cheap. I used to go there every once in a while, and I would be surprised at how low cost things were at Big Lots. Last time I was there, just a few days ago, actually, at one in here in La Mesa, California. I was like, wow, this seems way more expensive than Walmart. And I only looked at a few things. Ended up buying one thing when I bought some toilet paper, just because I didn't want it to be a wasted trip. Even the toilet paper wasn't that cheap. Um, in a filing with the U.S. Securities and Exchange Commission, the retailer said it planned to close up to 40 stores this year. The company reported currently 1,392 stores are operating across the United States. That's down from 1,425 from last year. So they're already down from last year, and they're about ready to close at least 35, possibly up to 40 more. Here's how they put it in a statement here. Quote, in 2024, the U.S. economy has continued to face macroeconomic challenges, including elevated inflation, which has adversely impacted the buying power of our customers. Okay, so I just had to read down a little bit. They did admit it. They did admit that the customers just don't have the buying power, even with all the credit cards still available. But remember, we had a report, was it 3 weeks ago, 4 weeks ago, where it's now known that 1 in 5 people are maxed out on their credit cards, right? So we're at a turning point right now where the banks can either keep the economy looking like it's growing by not limiting the credit ceilings on these people that are maxed out. They can increase the credit ceilings and allow the economy to keep going for a little bit longer, because consumer spending is basically most of the economy. It's most of the gross domestic product, about 70% actually. So if the banks can do that, allow people to go further into debt, they can keep this economy going for a few more months, right? And I've said here that I don't think it's going to make it until uh, the economy's not going to make it until the end of October before we see something big drop. Either the banking system, the financial system, or something else come in to cover up this whole thing, to cover up the whole collapse, and look over here and kind of distract everybody from the financial situation. The retailer, like many others, has grappled with declining sales amid rising prices and a downturn in consumer spending. So it does go on to talk a lot about that. According to the financial disclosures, sales dropped over 10% from the first quarter of this year compared to the first quarter 2023. 10% drop, folks. So the store chain took a loss of 11. Oh no, it's worse, much worse. I was going to say 11 million. A loss of 114.5 million dollars, folks. That's what they're saying here. That's right out of the filing. That's not just me, being negative or doom and gloom. All right, what do you guys think about Big Lots? Do you miss them? Do you like shopping there? Do you think they're expensive? Will you miss them if they file bankruptcy, right? Like a lot of other stores we saw in the last few years. Let me know what you think about this down in comments, and hope everybody is having a good day so far. And please make sure you subscribe, come back for more updates. We try to get a video out every day. You being here watching these videos, keeping me alive. Thank you very much. And we'll come back with more updates thanks to you. Hope everybody's doing well. Big love, everybody. Bye for now. Peace.